Jet Airways confirms stake sale talks with the Middle East-based Etihad Airlines. In a letter to stock exchanges, the Naresh Goyal-owned carrier says no agreement has been reached yet and it will make announcement when the legal processes are complete. India's largest truck maker Tata Motors offers massive discounts and resorts to production cuts as truck sales take a big beating. Dealers say for some heavy trucks, the discount is as high as 5 lakh rupees. The centre knocks at SEBI's doors for an open offer exemption in NALCO divestment. Sources tell ET now that the government wants to take the auction route to offload its stake in NALCO and EIL to get a good valuation. Gold loan companies like Manappuram and Muthoot surge after an RBI draft report recommends SOPs to push gold-linked financial products. Now, the central bank's initiatives comes at a time when the government is looking at ways to trim gold imports. Good afternoon. You're watching Business Day and I'm Nisha Podar, and straight to the big story at this hour. Jet Airways is poised to be the first beneficiary of 49% FDI that was allowed in domestic airlines last year. Sources tell ET now that talks between Jet and Abu Dhabi-based Etihad are in final stages and Etihad can finalize a partner as early as next week. Sumit Chaturvedi joins in with more details on that. Sumit, there has been buzz for a very long time. Now it looks like it's getting closer to consummation.
Well, it's getting really closer to the confirmation. Well, Jet and Etihad deal are close to sign a deal, and deal on this issue can be signed as early as next week. Well, it was quite evident that when KFA's license expired on Monday, it was quite evident that Jet is now the front runner for this deal for selling stake to Etihad, and that's what is happening now. Well, we are hearing from our aviation ministry sources that 24% in Jet Airways can be sold to Etihad for around rupees 1,500 crore to 1,800 crore rupees, and we can hear about this deal within a week's time after Etihad board meets next week. Well, Jet Airways has confirmed this today itself. They have said that they are in talks for a potential tie-up with Etihad Airways, and various structures are being explored currently, but they have not applied for any regulatory approval because the talks are still going on. But yes, it is very clear now that Jet is the front runner and deal is very near. It's in the last leg and it will be signed very soon, maybe in the next week.
All right, Sumit, thanks so much for all those details. And of course, this deal will be closely watched out for. Now, slowdown blues continue to worry the auto industry, and in order to tide over a serious drop in sales in the commercial vehicle segment, Tata Motors is offering highest ever discounts to push the volumes up. Kartika Trehan joins in with more details on that. Kartika, what is really happening? Sales not happening, discounts to lure the buyers? All right, Kartika, we'll get back to you on that answer very quickly. But equities continue to gain on the Lal Street. The Nifty ended the day above the 6,000 mark and the Sensex really gained 50 points. Oil and gas and telecom stocks really led the gains for the day. Aisha Faridi is right here to take us through the trading action. Aisha.
Well, a day of consolidation wherein the Nifty just about circled around that 6,000 mark for the better part of today's trading session and closed in as well at that level above 6,000. And we haven't seen these closing levels ever since Jan 6, 2011. Can't really say the same about the banking pack, which was just mildly in the negative, down about 0.2%. However, good gains coming in for the broader markets, about 0.6 to 1% between the mid and the small cap indices. Gains on the Nifty were restricted to names like Dr. Reddy's, Bharti, Reliance, Kane and ONGC. Watch out for the oil and gas pack because that seems to be on a steady move for the last two trading sessions. Dr. Reddy's held out well, as was the case with BOP, SBI, TCS as well as Ambuja. And on the flip side, there was some pressure coming in from Hero MotoCorp, Mahindra & Mahindra, Maruti Suzuki, ITC as well as Sun Pharma. Good gains, like I said, when it came to the broader markets. So Manappuram Finance, Muthoot Finance, Hexaware, Reliance Communications, Idea, United Phosphorus, Indian Hotels looked good, Tata Chemicals. You also had good moves coming in for Hindustan Zinc as well as Syntex and Godrej Industries too. Let's see where the market takes us tomorrow. We'll catch you again with the market action and trading calls at 8 a.m.
All right. Thanks, Aisha, for the market report. Let's also hear out some of the market experts and their investment ideas for the day.
At this point in time, if the majority view is that 2013 will be a good year, I am part of the majority. I think the broader market may be up, say, so I am somewhere in between. Broader market may be up, say, around 15-20%, but mid cap and small cap can give you 25 to 30% return, something that makes equity markets attractive.
To our mind, there are still two key issues on the macro environment. One is the ability to get the investment cycle moving again, and the second is in terms of starting to gain some control on the fiscal deficit and rebalance this economy from consumption towards investment, because that is what will really give us a sustainable growth cycle comparable to what we got in 2002, 2007 or 2008.
All right, let's also get a sense of how the futures and options activity really shaped up for the day. And to tell us all about that, Navneet Saluja from the research desk joins in now. Navneet, good to have you on the show. Take us through all the action. What are you reading on your screens today?
Well, Nisha, it was a flat closing for the futures. They moved only 2 points today. And if you look at the closing, they closed at about 60.38 with about 29 to 30 points premium to the spot Nifty. So if you look at the premium, that has gone down today essentially because you saw the spot Nifty moving up by about 15 to 16 points, whereas the futures closed only 2 points up. And during the day, we saw built up of about 7 lakh shares for the Nifty January futures. And if you look at the options data, well, the base, the range for the Nifty is shifting upwards to about 5,900 to 600. So the range has moved up by about 100 points, and higher level call strikes, the open interest concentration is being shifted there. So if you look at strike like 6,200, that added about close to 7 lakh shares. Also 6,300 call strike added 2.5 lakh shares, whereas on the put side you had 5,600 strike adding about 7.4 lakh shares. So essentially the lower level put strikes, major open interest addition is being seen there because the traders are not expecting the markets to fall to that level of about 5,600 to 5,700. So today more of put writing was seen, and if you look at the stock futures, fresh longs were seen in Nifty counters like Kane and ONGC, which did well in today's trading session. Also you had Dr. Reddy's, Bharti and Infosys, which did well. Fresh long positions were being built up for all these counters. On the short side, you had Punjab National Bank and Tata Power, which were down today. And again, you had Lupin and Sun Pharma, which were down, so short positions were seen there. From the mid-cap space, you had Hexaware, Reliance Communication and Idea, which did well, so long positions were seen there. Well, in terms of open interest gainers, you had Idea, Godrej Industries had a good move and huge amount of open interest addition was seen, followed by REC and NMDC, which was down in today's trading session. And talking about the participation, well, the turnover was below average. The volumes are quite thin. Today we did about only 71,000 crore of turnover on NSE by the end of the day.
All right, Navneet, thanks so much for taking us through all the details and all that really transpired in the futures and options market. Now, we were earlier telling you about Tata Motors, and it's offering highest ever discounts to really push the volumes in the truck sales. And Kartika Drihan joins in with more details on that. Kartika, to all done to lure the customers here.
Well, absolutely. We've been seeing how commercial vehicle space has been performing. In fact, since July, it's on a complete downturn right now. There's a lot of inventory pile up across all the manufacturers. Talking especially about Tata Motors, since September, there was absolutely completely low demand. So they're having a huge inventory pile up that's resulting right now in the month of December, where they are clearing up their year-end stock by providing huge discounts. There have been never discounts close to about 3 lakhs to 5 lakh rupees, but this time we are seeing such huge discounts. Earlier, every year, we've been seeing a discount of anywhere close to 75,000 to max 1 lakh rupees. But here, if you see, it's clear 10% discount on any model that you're going and buying up, which is a commercial vehicle model. This is largely coming on how the economy overall is panning out. There's no construction activity. There's no infrastructure activity. Also, there's a huge mining ban that's all impacting on the commercial vehicle space at this point in time. Not just Tata Motors, this is also resulting where Ashok Leyland and Eicher Motors is also providing huge discount. However, we understand that Ashok Leyland isn't providing as much as what Tata Motors is providing. If you see Tata Motors, the overall production capacity is as low as 35 to 40% at this point in time. They did have a plant shutdown at Jamshedpur for about 3 to 4 days sometime in the month of November. In the month of December, again, they had a plant shutdown for 3 days in Pune. So only the medium and heavy commercial vehicle segment is seeing this huge slowdown in the entire range of sectors that they work in. On the other hand, it's only the LCV space which is pulling up right now in terms of bringing in some kind of a revival right now for the entire commercial vehicle industry.
All right, Kartika, thanks for all those details, and it's an important development as far as the automobile sector is concerned. Now, gold loan companies Manappuram as well as Muthoot Finance really gained in trade today after an RBI draft report recommended SOPs to push the gold-linked financial products in line with the government's fiscal policy that aims to bridge a ballooning current account deficit. Poonam Sani now joins in with more details on that. Poonam, the stocks were really on fire today. What details do you have?
Absolutely. If you remember that the KUB Rao committee report was much awaited, and there was a huge regulatory overhang on the basis of this report, especially on the gold loan finance and BFCs. But overall, in terms of the draft norms, definitely the report, the norms are largely positive than negative, and hence we saw a huge uptick in the prices. Also, analysts say similar stuff, and the target prices for Manappuram Finance is at 48 by Edelweiss as well. Coming to the draft norms now, few of the key norms is that use of PAN card and check payment for large gold loan transactions. Remember that gold loan transactions are largely in cash, and the street was estimating a cap of approximately 50,000 rupees to 1 lakh rupees as per the transactions. But now the indicative value is 2 lakh. So hence this is definitely a huge positive, and it will not curb any kind of business growth or not impact any business transactions for the gold NBFCs. Again, next is the instead of a 60% current LTV, the recommendation is for LTV of 75% calculated purely on the value of the metal. This is the impact of this would be neutral, as the loans disbursed by the gold NBFCs will not be impacted much, and hence no impact on the growth. Just two small negative could be that recommends putting cap on interest rate, as well as recommends reviewing the raising resources by NCDs. Now we would have to wait and watch what can RBI do about it. Will there be any further regulatory risk on this? But overall, as of now, the draft norms are definitely positive.
Right. Thanks, Poonam, for all those details. Now, the government is keen to dial the auction route for selling stake in NALCO and Engineers India. But the present SEBI rules really do not allow that, which is why Finance Ministry has now asked the market regulator SEBI to tweak the auction guidelines and make it more aligned with the secondary market. Mrinalini Krishna joins in with more details on this. Mrinalini, what are the proposed changes here?
What we are picking up from sources in the Finance Ministry is that it's written to the capital markets regulator SEBI to tweak norms for the auction process or the offer for sale through exchanges. Remember, Finance Ministry is looking to divest stake in both companies like EIL, which is Engineers India, and NALCO, but both these companies fall outside the purview of the companies that are allowed to take the auction route by SEBI's current regulation. Remember, SEBI's current rules allow auction process only in two conditions. One, where the promoter is trying to meet the minimum public shareholding norms, and secondly, for top 100 companies by market cap. Both these companies are not part of that, but the government wants SEBI to allow more companies to come under this process, so it can go ahead and divest stake in companies which fall outside these two categories as well. Apart from that, the government is asking SEBI to make the indicative price during bidding visible so that investors can make more informed bids. Also, thirdly, what the government is looking to ask SEBI to do is to shift to a T+2 settlement cycle rather than a T+1 cycle that is there right now, in order to allow better and more efficient transaction. It can give some bit of breather to global investors as well. Another key point of contention was abolishing of the 25% margin that bidders have to pay while they're making their bids, and that margin goes up to 100% if they have to change their bids. So all of that is what SEBI is trying to do, is what Finance Ministry is asking SEBI to do away with, clearly with the intention of making the process more efficient and more aligned with the secondary market, and making it easier perhaps for global investors to participate in the divestment process.
All right, Mrinalini, that's something the markets will be closely watching out for. Now, shifting focus to an ET Now exclusive then, the taxman has kick-started the new year with a big-ticket probe into RPG Group's KEC International today. For more details on this developing story, we are joined by Ashwin Mohan, who earlier broke this story on ET Now. Ashwin, good to have you on the show. Now, what are they probing really, and what is RPG Group's reaction to this?
Well, Nisha, if you're a taxman who's facing a daunting annual collection target of 5 lakh crore rupees and you have less than 3 months to do that, then you're clearly under pressure, and therefore it doesn't come as a surprise that the Income Tax Department's investigative wing has started cracking the whip on India Inc. And what I understand from government sources is that earlier today, the investigative wing of the Income Tax Department in Mumbai conducted nationwide survey operations across 8 to 9 premises of the RPG Group's KC International. I understand that the entire trigger for this survey operation was suspicions of alleged bogus purchases by KC International. Now, these suspicions haven't been verified as yet. That will happen once the entire probe is concluded. This probe, we understand from sources, is still going on. It is spread across Mumbai, Gurgaon, Nagpur, and several other associated enterprises in Calcutta as well. So therefore, it is quite an extensive probe. We will get more clarity on the outcome of this probe tomorrow in the first half. We tried to get in touch with the RPG Group, and they have confirmed the story to ET now. They are saying that they are cooperating with the IT authorities, and also that they are confident that the Income Tax Department will find their books satisfactory.
All right, Ashwin Mohan bringing in that exclusive bit of information right here on ET Now. Thanks so much. In a corporate development, GMR's termination notice for the country's biggest highway project worth at least 6,000 crore rupees to NHAI has irked the authority. Now, NHAI has now hit back at GMR, calling its termination notice for the Kishangarh-Udaipur-Ahmedabad highway project flawed. Suchetna Ray joins in with those exclusive details. Suchetna, what action is NHAI really looking at taking, and what could be the impact of all this on GMR?
Nisha, there are two things that NHAI has made clear to GMR. First, the termination notice that GMR sent to the authority is flawed simply because GMR has not served the 90-day notice period that is required. And secondly, it is all about the forest clearance that is due for this mega highway project, over 550-kilometer long highway project. Then NHAI has assured that this forest clearance will be in place in the next 7 to 10 days. But sources tell us that despite all these, GMR goes ahead with the termination, they will have to pay 6% of the total project cost, which is, remember, over 6,000 crore rupees. Also, NHAI is seriously considering blacklisting GMR if they go ahead with the termination notice, and that will be trouble for GMR because blacklisting that company would mean the information will not be able to bid for any projects under the public-private partnership for the next 1 year.
All right, Suchetna, thanks so much for joining us with that exclusive detail. Now, the empowered group of ministers on spectrum, headed by Finance Minister P. Chidambaram, was scheduled to meet today to discuss the details of the spectrum auction due this fiscal. However, the meeting has been deferred to 7th of January, and Gauri Dwivedi joins in with more details on this. Gauri?
The ministerial panel will meet again in 4 days to take a final call on a whole host of issues as far as 1800 and 900 megahertz auction is concerned. Remember, this is round 2 of these auctions, and more importantly, to take a call on what really happens as far as the 800 megahertz is concerned. Remember, there were no auctions that took place. There is only one telecom company that's interested in buying the CDMA spectrum, that is Sistema, which has all along maintained that it should not participate in these auctions simply because its licenses are still valid. So in the wake of these developments, EGON needs to take a decision on what really should be the way forward as far as 800 megahertz is concerned. Should it be the prices should be slashed by a drastic, there should be a drastic reduction in these prices, or should it be referred back to TRAI given the present scenario as far as CDMA is concerned? For GSM, of course, it is the nitty-gritties that needs to be decided by the EGON, which includes rollout obligations, payment structures, spectrum user charges, and of course, most critically, what should be the timeline for these auctions? Should it be before the budget, or can they really do it before the 31st of March, that is in the current financial year? Those are, of course, details that will be taken up in the next EGOM that meets on the 7th of January.
All right, we'll wait and watch out for the next meeting of EGOM. Now, Deal Street turned out to be a damp squib in the year 2012, with only a few year-end transactions really saving the day for the bankers. But deal makers are banking on the government's reform drive for more fireworks in the year 2013. Ashwin Mohan reports on this.
Deal makers are more than happy to see the back of 2012. The year saw 921 deals being struck for a total value of $33.6 billion, a fall from 1,021 deals in the year before. In fact, it was a complete dry spell in the first half, and M&A activity picked up steam only after October. The biggest deals of the year include GlaxoSmithKline's acquisition of 31% in its Indian arm and Diageo's acquisition of Vijay Mallya's United Spirits. Experts say there will be a rebound in the new year.
because of the valuation improvement, and hopefully with the government coming in and playing its role regarding the tax and regulatory issues that we discussed earlier, I think it should be a very robust and significant year for M&A.
Clearly, I think 2013 will be different. We'll see a lot of more PE divestments and therefore M&A activity picking up, as well as, because of the reforms measure, much more investments likely to flow into India.
So which sectors are deal makers betting on?
M&A, I would expect a lot of M&A on the pharma side. On telecom, you will probably look at some sort of consolidation in the market. Then again, infrastructure is very crucial.
With the new companies bill coming into play soon, Indian companies will now have greater flexibility in deal making.
It does give a lot of fillip to outbound mergers, as currently we are only allowed inbound mergers.
Finance Minister Chidambaram has already set the tone, making the right noises to lift investor sentiment. And if he manages to back his words with action in the forthcoming budget, the M&A scene may be buzzing with activity this year. Ashwin Mohan, ET Now, Mumbai.
Now, India's cheapest tablet device, Akash, has been in the spotlight given the Indian government's tremendous efforts in making sure Akash manages to change the education landscape in India in the year 2013. Now, brand equity Sonali Krishna caught up with the creator of Akash and CEO of DataVind, Suneet Tulli, and began by asking him the progress they have made in terms of meeting the number of orders received from the government so far.
After this initial batch of 100,000 units, they will put out tenders for another 5 million units. And they've got a budget in place for those 50 lakh units as the second stage. We expect that the scale will easily reach 30 to 40 million units annually as soon as 2 or 3 years from now.
You said, it will look at a tender process. What do you mean? That you'll be one of the many competitors?
We will be one of the many competitors. What the government's done is that they've recognized that the specifications in technology change very, very fast. So they're going to improve the specifications or modify the specifications every 6 months and ask everybody to come in and bid and try to achieve their price point. The government has set a target price point which is very, very aggressive. So they're purchasing around $40, rupees 2,263 at this point, but the target price is $35. The very large companies, the traditional brand names that you may be more familiar with, don't want to participate in these. I'll give you a prime example. The UP tender for tablets disclosed. The lowest bid for that was 19,000 rupees. So, by setting eligibility criteria in that tender as an example that allowed only multinationals to participate, the lowest bid in there was at 19,000 rupees.
There were a lot of accusations and allegations made that, you've essentially picked up a Chinese kit and assembled it in India. I mean, is that actually true? And, what was the problem the government had with you and, of course, the several critics that you've cultivated over the last few years?
The government's not had any problem with it. In fact, the government's not the one who said that they have an issue with where the product's made.
Sure.
Okay? Yes, to expedite the delivery of the product, we started collating kits in China, and then we did the final assembly here, and then we shipped those. Okay? Nothing wrong with that. So those that say, hey, it's off the shelf from China, ya leo, no.
All right, with that, it's a wrap from me. Have a great day.